Hello, ladies and gentlemen. Welcome to Senior Living Solutions. Thank you for joining us today. We specialize in helping families find ways to pay for senior living. The cost of a senior living community or private duty home care is certainly not cheap, so our primary objective is to help the family find solutions and ways to pay for this type of care. Today, we are going to be specifically focusing on the non-service connected veteran pension, more commonly referred to as aid in attendance. This pension is a tremendous benefit that can pay up to $2,984 per month tax-free. It's nothing new. This benefit was created in 1952 specifically to help wartime veterans and their spouses pay for senior living care or private duty home care. I believe that what separates us from other organizations is credibility. Over many years of helping veteran families obtain this benefit, we've been fortunate enough to have put together a phenomenal team of experts that assist our veteran families through this complicated process. We work closely with outstanding teams of VA accredited attorneys, and we've been fortunate enough to have endured the test of time. We have 25 years of combined experience, and our team has over 75 million in paid out claims to veteran families, so we're very proud of that. The VA, as you know, does not make it easy for veteran families to obtain this benefit, and as of October 18th, 2018, they've made some changes to their regulations, which has made it even more difficult for veteran families to obtain this benefit, and has really forced a lot of the veteran advocate organizations to leave the industry. And that's unfortunate. Everybody in our organization is either a veteran or a family member of a veteran. So we're very passionate about helping our veteran families qualify and obtain this benefit that they've earned. If there are any veterans on the call today, we'd like to thank you for your service to our country. For any spouses or family members, we'd like to thank you for your sacrifices as well. We hope this presentation brings some awareness about this benefit. We hope to explain this benefit and process in a way that you have not seen before. And we want to show you why we feel that we are the organization for you. It's never been more necessary for a veteran family to work closely with an advocate than it is today. And we want you to know that we can still help your family obtain this wonderful benefit, even with the new rule changes. So let's go ahead and get started. Again, we're talking about the non-service connected veteran pension. It is a monthly pension, a federal program that can offer wartime veterans and their spouses a pension payment from the Department of Veterans Affairs. The term survivor's pension is the same benefit, but it pertains to the surviving spouse of the wartime veteran. The term aid in attendance is used to describe the maximum amount of benefit the claimant can receive. There are actually 3 levels to this benefit, to this pension, aid in attendance being the highest level. It's more commonly referred to as aid in attendance, and from this point on, a lot we will refer to it as aid in attendance because that is the benefit that we seek for our families. Again, it was established in 1952 specifically to help veteran families pay for long-term care needs, such as assisted living or home health care. And over 30 million wartime veterans and or their surviving spouses are potentially eligible for this financial pension. The problem is they don't know about it, and that's unfortunate. You must be over the age of 65 or permanently disabled to receive this benefit. The VA basically has 3 areas of qualification, and we'll get to that in a minute. First, let's talk about the benefit amounts. These are the updated amounts actually going into 2019. The MAPR is the maximum annual pension rate. Okay, it's the maximum amount that the veteran family can receive in pension. If we have a wartime veteran with 1 dependent, which usually means he or she is married, the benefit is $2,230 per month. If we have a wartime veteran that does not have any dependents, the benefit amount is $1,881 per month, and you can see the annual figures there too. And we run into this more often than you would think when we have two married wartime veterans. The benefit is $2,984 per month. And every once in a while, we'll run into a situation where we have a healthy wartime veteran, but his or her spouse is the one that is needing the care. And when we come across that situation, the benefit is $1,477 per month, and that is called a Vet Plus One. And of course, the surviving spouse. If we have the widowed spouse of a wartime veteran, that new benefit amount is $1,209 per month. And all of these amounts, again, as I mentioned earlier, reflect the highest level of pension, which is known as aid and attendance. And of course, again, all of these benefits are tax-free. So you can see that these are tremendous benefits. And it's a benefit that the family and the wartime veteran has earned, so we're very passionate about helping them obtain this pension. In order to receive those benefits, the VA has three areas of qualification. The first is the veteran had to have been a wartime veteran, meaning he or she must have served at least 90 consecutive days of active duty. One of those days must have been during a period of war. The veteran must have received a discharge other than dishonorable. If we're dealing with the widowed spouse, he or she must have been married to the veteran at the time of passing and must have never remarried. Very important. Here are the wartime dates. For the most part, in 2018, 2019, we're working with World War II veterans, Korean War veterans, Vietnam veterans, and some Gulf War veterans. I want to bring your attention to Vietnam in country. From February 28th, 1961 through August 4th, 1964, basically that 3-year period is the only period where the veteran had to have served in country in Vietnam, boots on the ground. These other periods, the veteran could have been active duty and stationed anywhere in the world. Only from this period of February of 61 through August of 64, Vietnam, did the veteran actually have to serve in country. Very important to understand that. So the first area of qualification is wartime service. The second area of qualification is we have to show the VA that the veteran or surviving spouse is receiving and paying for third-party ADL assistance. ADL stands for Activities of Daily Living. And what do I mean by that? The VA has a list of ADLs, and in order to receive the full aid and attendance, the claimant must be receiving help with at least 2 of these ADLs. And for many, many years, we operated off of a very short list of ADLs. Due to the new rule changes in October of 2018, they have increased it to what they are now calling IADLs, which is Independent Activities of Daily Living. So they did make it a little bit easier from a medical standpoint. Here is the list that we have been working with ADLs for many, many years: bathing, showering, personal hygiene, dressing, mental therapy, physical therapy, toileting, ambulation, and nursing services. Because we are conservative, because we don't want to give the VA any reason to delay or deny a claim, we still work off this list. In other words, we make sure that our families are receiving assistance with at least 2 of these before we apply. Now, they have opened it up a little bit to IADLs, medicine management, yard work, transportation, cooking and cleaning, laundry, those types of things. But in order to be safe, we still make sure that these assisted living type ADLs are being provided no matter where the claimant is living, okay? And the reason why we do that is because we want to make sure that the cost of this care, the cost of the community or the cost of the private duty home care, is going to be used as a medical deduction against the claimant's income. Because if the VA doesn't allow an ADL, they won't allow the medical deduction. So the veteran will eventually get declined for having too much income, and we don't want that. This care is documented by the caregiver. It can be, and I'll get to this in a minute, it's called the Care Expense Statement Form. The VA is very particular about making sure that they have this type of form. In other words, if you just go and list something on an application and don't document it properly, they again then won't allow that medical deduction, which is crucial, as you'll see in a minute, to the veteran receiving the full amount of aid and attendance. Okay, so the care expense statement goes in. The veteran can be living in assisted living receiving this care. The veteran family can receive the care in home and have private duty care. They have to be paying for it. Don't forget, they have to be receiving the care and paying for the care. A family member can provide this care other than the spouse. If the veteran or the surviving spouse has a son or daughter that is willing to provide the care, the VA will allow the veteran or surviving spouse to pay the son or daughter to provide the care. Same with a friend, same with adult daycare. The veteran can also, or surviving spouse, be residing in independent living. Even when they're in independent living, we want to make sure that 2 of these ADLs are being provided. We want to make sure that we're going for the full aid and attendance amount, and we don't want to give the VA any reason to delay or deny a claim. So sometimes when we have a family in independent living, receiving independent living type care, we will ask a family member, a son or daughter, to come into the community, provide additional care, get paid for it, and the additional care will be usually 2 of these original activities of daily living, just to make sure that the family is insured the full amount of aid and attendance. Of course, nursing home, if they get to that stage, a lot of times they go on Medicaid. That's a different issue. But if they are for some reason paying out of their pocket for the nursing home, then the VA benefit will still apply in a nursing home, assuming obviously that these ADLs are being provided, which they will be in a nursing home. The third area of qualification is based off of income and assets. And this is where some of the rule changes have come into place as of October 18th, 2018. Right now, the VA's website is showing that countable income is how much you earn, including your Social Security, investments, IRAs, any type of income that you receive currently, fixed monthly. Pretty much they take into consideration all sources of income. They do allow, as I've mentioned earlier, certain medical deductions, and we'll get to that in a minute. And what they do is they compare the income to the maximum annual pension rate. And the best way to explain this is to give you an example. And what we're going to do is we're going to take an example of a single veteran with no dependents. Currently, his benefit is $1,881 per month. Essentially, what the VA is saying that this veteran's fixed monthly income must be below the $1,881 per month in order to receive the pension. And I'm going to show you how that works, okay? They want to make sure that the income is below $1,881. So let's take Bob for an example. Bob is a Korean War vet. He's living at home. We have up here the maximum annual pension rate for a single veteran. This is the annual figure, but we're going to focus on the monthly figure because the VA refers to it in a monthly manner. They pay it in a monthly manner, and a lot of people understand their monthly income a little bit better sometimes than they understand their annual income. So we're going to focus right here on the MAPR, which is the maximum annual pension rate for a single veteran. The maximum pension Bob can receive is $1,881 per month. Remember, this is the income example, so we're just focusing on the income. We have to make sure Bob's income is below $1,881, and how do we do that? Don't worry about the 5% right now, but we're also going to pretend that this area right here is the local VA, because I think it's important for families to understand what happens or what could happen and what has happened many times to many veteran families over the years when families go to the local VA to obtain this benefit. There are only 3 pension centers for this benefit in the United States. There's one in Philadelphia, St. Paul, Minnesota, and Milwaukee, Wisconsin. The local VAs primarily deal with other benefits such as health care or disability or hearing and dental and vision and those types of things. So we also want to stress the importance, not only this income example, but the importance of making sure that the family has an advocate, because you'll see why. So here we have Bob. He's a Korean War veteran. He's living at home. He has $1,400 per month in Social Security, and he receives a pension from, let's just say, the post office for $700 a month for the time that he worked there. Bob's current total monthly income is $2,100 per month. Well, Bob hears about this benefit, and he and his daughter Mary head over to the local VA. And the local VA representative starts asking Bob some questions, and when Bob gets to the income, the local VA representative says, "Bob, what is your monthly income?" And Bob says, "Well, it's $2,100 per month. I get Social Security and a pension." The local VA representative, not having quite the experience needed to help Bob with this benefit, opens up the handbook and sees that in order for Bob to receive this pension, he has to be below $1,881 per month in fixed monthly income. Bob's at $2,100. He's over. What happens many, many times, I've seen it 100 times. "Bob, thank you for your service. You have too much income. Have a nice day." And Bob and Mary go home, and for the rest of their lives, they think that Bob just has too much income to qualify for this pension. And that's unfortunate, because it's something that Bob has earned. So Mary, being the loving daughter that she is, gets on the internet and starts doing some research. And she finds out that Bob is actually allowed to take medical deductions in an effort to lower his fixed monthly income. And she finds out that in order for a medical expense to be used as a medical deduction, 2 things have to happen. 1, the expense must be a recurring monthly expense. 2, it must be greater than 5% of the MAPR. The maximum annual pension rate that we broke out monthly is $1,881 a month. In order for the expense to be used, it has to be greater than 5% of the $1,881, which is $94 a month. So Bob's expense has to be recurring, and it has to be greater than $94 per month in order for it to be used as a medical deduction. Okay, very important to understand. So Mary grabs Bob's statements, and she sees that he's currently paying $134 per month for Medicare Part B, which is withheld from his Social Security every month. She also sees that he's paying an additional $219 per month for his Medicare supplement. Now, both of these are greater than $94 per month, and they both recur monthly, okay? They're never ending, all right? So the VA will allow these 2 as a medical deduction. So Mary takes out her calculator, she adds the 2 together, and she gets $353 a month, which in her mind is allowed to be deducted from Bob's income. However, the VA has an internal formula that they've designed that is going to then take that $94, the 5% of MAPR, which is $94, and subtract it from Bob's $353, which allows him a full medical deduction of not $353, but $259 per month. Okay, and that's the formula that they use for income. So then they will take Bob's initial income of $2,100. They will subtract his allowable medical deduction, which is $259, and that comes up with $1,841 per month. So Bob's IVAP, which stands for Income for VA Purposes, IVAP, his new fixed income, his income that he can report, is no longer $2,100. It's $1,841 per month, which brings him below the 1881 MAPR. Okay, so in Mary's mind, she's just accomplished the impossible. She's gotten Bob from 2,100 down to 1841. It's below the 1881, so she and Bob go back to the VA. They explain this to the representative. The representative says, you know what, you're right, I apologize. Here is your application. And Bob and Mary go home, they fill out the application, they bring it back to the local VA, and then the local VA then sends it off to the appropriate pension center. Remember, there are only 3. And then for the next 9, 12, 15 months, the VA drip mails on Bob and Mary saying, we need this form, that form, caregiver form, doctor form, fiduciary form, that form, this form. And I've seen it go on for as long as 2 years and still end up in a decline, and it's unfortunate. But let's just see what happens to Bob, because Bob then waits 12 to 15 months and finds out that the IVAP, his 1841, the number that Mary got down to, is actually subtracted from the benefit amount of 1881. So the VA says 1881 minus 1841 equals 40. Bob's benefit is $40 per month, and he waits 12 to 15 months to find that out. Okay? Any positive income is subtracted from the benefit amount. So Bob started at 2,100. Mary used the deductions after they reduced the deduction to get him below the 1881, but it was still positive 1841, so they subtract it from the benefit. Any positive income is subtracted from the benefit, but the reality of the situation is that Bob doesn't even receive the $40 per month because he's living at home and he's not receiving the proper and paying for the proper ADL care. Okay, so the reality of the situation, I know this was the income example, but the reality of the situation is that Bob does not even receive the $40 because he's not paying for the proper care. And that's unfortunate. And very often when families end up at the local VA, things like this happen, and it's unfortunate. So that's why it's more important than ever for a family to work with a team of experts when trying to obtain this benefit, and you can see why. So let's see what happens. 2 months go by, and Bob's situation is still the same. He has his $2,100 per month, but Mary and Bob agree that Bob's health is deteriorating a little bit, and he's now in need of additional care, and he needs to go into an assisted living community. So Mary starts visiting some assisted living communities, and the cheapest one that she can find that will provide the care that Bob needs in Bob's area is $2,900 per month. Well, right now, they can't afford that. Bob's only bringing in $2,100 per month, plus he has those Medicare supplements that he has to pay for. So there's no way he can afford the $2,900 per month cost at the assisted living community. However, while Mary and Bob were visiting the community, the director told Mary and Bob about the veteran pension and about senior living solutions. And Mary says, oh, well, we've already been down that road. A couple years ago, we waited 12 to 15 months and ended up in a big fat decline letter. So the director says, I assure you, call Senior Living Solutions. They can still help. So Mary gives us a call, and we go over everything with Mary and Bob, and we determine that Bob still has the $134 Medicare Part B, the $219 Medicare supplement. So we then recommend that Mary start providing the care for Bob, and that Bob pays Mary that $1,841 per month for the care that Mary is providing. And Mary has to help with 2 of those ADLs that we mentioned earlier: bathing, showering, dressing, walking, personal hygiene, physical therapy, mental therapy, etc. Mary doesn't necessarily have to bathe Bob, but maybe she stands over in the other room a couple times per week when he goes to bathe to make sure he doesn't slip and fall. Maybe she helps lay out some clothes, tie some shoes. The cost of this type of care is so expensive that the VA does not have a problem with Mary providing the care as long as Bob is paying her for it. Okay. And what we've now done is we've now created an additional medical expense, which is greater than 94, and it recurs monthly because Bob's paying Mary monthly for that. Okay. Now, once Mary receives the money, there's things that she can do. It's kept in the family. Okay. And because we average 60 to 90 days, maybe she only has to provide this care for 2 or 3 months, and then they'll have enough money to make the move into assisted living, as you'll see. So we now list the 1841 as a medical deduction. We document it with the completion of the care expense statement that Mary completes. The VA knows right away going in that daughter Mary is providing the care and that Bob is paying her for it. Okay, so they know right away by the care expense statement. But now we have, when you add the three together, a total medical expense of $2,194 per month. Okay, and the VA does the same thing. They take the $2,194, they subtract the 94 MAPR, which gives now Bob $2,100 of total allowable medical deduction. Well, his income is $2,100. His now allowable medical deduction is $2,100. So Bob's IVAP, his income for VA purposes, is now 0. We've zeroed it out. Okay. The VA does the same equation. They take the amount of the benefit, they subtract any positive income or the IVAP, which is now 0, which leaves 1,881. So Bob's benefit is now $1,881 per month. He's received the maximum annual pension rate of aid in attendance, $1,881 per month. Okay, which now he has enough money to make the move into the assisted living community. He still has his $2,100. We've now increased it, the VA pension, by $1,881. His new monthly income is $3,981. He still pays his Medicare 353 premiums, and he now has enough money to move into the assisted living community and still has a surplus of $728 per month, which he can use to take Mary out to dinner a couple times per month. He can gamble it at bingo night with his buddies. There are absolutely no restrictions to what Bob can or can't do with that money. Okay, so we've taken a situation where Bob was caught between a rock and a hard place. We've been able to help families get the money that they need to make the move into the assisted living. Point is you have to have that medical deduction in order to zero out the income. The final area of qualification, the asset picture, which is recently changed, October 18, 2018. Right now, the VA's website says that your yearly family income and net worth must meet certain limits set by Congress. Basically, just having been in this business for so long and working with such a fine team of experts, the total asset value for a family household combined should be below $127,000. Okay, that's not talking about the home. We'll talk about the home in a minute. Home is exempt when you apply, so we're not focusing on the value of homes right now. We're talking about stocks, bonds, mutual funds, checking accounts, savings accounts, money markets, CDs, annuities, IRAs, liquid assets, those types of things. Okay, so generally speaking, the total asset value should fall below $127,000. And again, the best way to show you how this works is to give you another example. It's a little bit shorter. Bob's situation, again, same thing. His income is $2,100 per month, but we're going to focus now on the annual side of things because we're talking about the assets. All right, so his annual income is $25,200 per month. The cost of the assisted living community, as we mentioned, is $2,900. So his annual medical cost is $34,800. Remember, we're not taking the VA pension into consideration here. We're just talking about Bob's fixed monthly income from Social Security and pension. Okay, he brings in $25,200 annually, and the cost of the community is $34,800 annually. Bob now, in a different situation, has total assets of $140,000. Okay, well, he falls above now the $127,000 of limit that the asset value should fall below. He's over it. But now what the VA is doing is they're taking the annual income, the $25,200, and they're adding it to the $140,000 of total assets. This gives Bob $165,200 now of total assets. But what they will allow him to do is deduct the cost of the assisted living community up to the amount of his income. Okay, so even though the cost is $34,800 annually, they will now allow Bob to deduct what he just added on, bringing him back to $140,000 of total assets. Okay, so what Bob does is he transfers those assets, $20,000, let's just say, to a family member or to an irrevocable trust or something of that nature. And now the VA has a 3-year look-back period on the change of ownership or transfer of assets. That does not mean that Bob has to wait 3 years. They have an equation where they will take the $20,000 and they will divide it. Right now in 2018 is 2,170. That may change here in the future, so you always want to check the numbers. But right now it's 2,170, which means Bob, because of this $20,000 transfer, essentially would have to wait 9 months before he could apply for the benefit. Now, there are things that Bob can do. This is why it's so important to work with an advocate. There are things that Bob can do legally to reduce that amount of time that he has to wait. Okay, we work with very qualified teams of VA accredited attorneys that can provide various options to the family that will help them qualify more quickly, okay, within the law. So it's very, very important to seek guidance of a VA accredited attorney in a situation like this, especially if we're dealing with the primary residence as well, because the primary residence is exempt when Bob applies. He does not have to disclose the value of the home when he applies for this pension. Having said that, if 6 months go by or a year goes by and Bob and Mary decide to sell the home, and one day $150,000 is deposited into Bob's checking account because of the sale of the home, then every year the VA is going to do a check or want an update on income, assets, medical expenses. And now if they see $150,000 in Bob's checking account, that could jeopardize Bob's future benefits. And they at some times have even asked for veteran families to send money back because they paid a benefit that they wouldn't have paid had they known about the sale of the home 6 months prior. So it's very important for the family to seek the guidance of a VA accredited attorney, especially even when dealing with the house, so that they can live comfortably, obtain the benefit, and not have to worry about selling it or renting it. It can be handled prior to the application. So definitely important to seek the guidance of a VA accredited attorney, and pre-planning is a must. It's never been more important to pre-plan for this benefit, which we can help you with. It's what we do. And again, we work with such a qualified team of experts and VA accredited attorneys that are also estate tax attorneys that can help us with these types of situations in order to help our families qualify for this earned benefit. Why Senior Living Solutions? Again, we have 25 years of combined experience in the senior living industry. Our team averages 60 to 90 days for the award to be approved. Our team has over 75 million in paid out claims, We offer a free initial consultation. Many times we spend up to an hour or more on the phone with the family at no charge on that initial consultation, where we can kind of determine what needs to be done. And 85% of the time, something needs to be done legally, financially, medically in order to get the veteran family qualified. Again, we work with a team of VA accredited attorneys, multiple teams with over 50 years of combined experience, and we work nationwide. We can help families in all 50 states. We can help the family in person or right over the phone, which is important. We never turn a veteran family away. We've helped families that have zero in assets, and we've helped families that have quite substantial assets. So we feel that all veterans have earned this benefit, and we do not discriminate based off a veteran or veteran family being frugal throughout their lifetime. Again, our team files a fully developed claim directly with one of the pension centers. We bypass the local VA offices and work directly with the pension centers, which allows our team to help our families, obtain the benefit more quickly. We never walk away from the family. We help them from start to finish. We are there, by telephone or in person as often as we can to help the family until that money hits their account, the money that they've earned. And of course, we can provide references upon request. We are members of the National Ethics Association, which we're very proud of for many, many years. We hope that we provided some good information for you today. The main thing I want to stress is that veteran families can still get this benefit. Very important to understand that. There are ways legally, ethically, and morally that we can help a family qualify for this earned benefit. So don't feel that our location or the new rule changes or anything of that nature may disqualify a veteran or a surviving spouse. Please always give us a call. We do offer a free initial consultation. We will spend as long as we need with you in order to make sure that we give you the proper advice and direct you in the proper manner. We want to thank you for joining our webinar. We look forward to working with you. If you have any questions about anything, please give us a call. Our toll-free number is 877-896-0181. Again, thank you for joining Senior Living Solutions. Thank you for your service to our great country, and we look forward to working with you. Bye now.